Let's review some of my top ideas for the upcoming week. And of course, as the market environment has shifted dramatically, favoring intraday moves versus swing trading, definitely a trader's market. As I've mentioned over the previous several weeks, that's where my attention and focus will continue to be until the market structure shift. So let's review my top move to move ideas for this upcoming week. A lot of economic data is on the horizon this week. We have CPI, PPI, we have jobless claims coming out this week. So again, significant emphasis is on momentum trading versus swing trading. So starting off with one of my top ideas for the upcoming week, that's going to be long scalp some momentum in Tesla. We had some nice relief in tech, overall market, in discretionary on Friday. So suppose the Qs and discretionary can make some ground above Friday's high early on next week. Potentially make some ground towards their declining 5-day moving averages. In that case, I'd definitely be focused on Tesla just as one avenue for a potential relief rally intraday for some momentum scalps, specifically targeting higher low entries or consolidation breakouts intraday. That's where my focus will be. Now, obviously, I'm going to avoid this idea entirely if we hold below Friday's high, if we're unable to really reclaim 265s, 266 with authority intraday and spend time above it. If we're displaying relative weakness, then I'll completely avoid the idea and instead potentially focus my attention to the short side in the event that we might get capitulation next week across the board. As it relates to this overall idea, very similar thoughts to NVIDIA and Palantir, for example. Next up, shifting gears to a small cap idea, so we can go more to intraday here. Let's take off moving averages. They're on VWAP rather. Go to a 5-minute time frame. So SUNE is the ticker here, SUNE. I'd like to see a pushback in SUNE, back into supply, ideally back towards this 45 cents, maybe a quick squeeze out and exhaust towards 50 cents. And if that's followed by a very sharp fail, that's when I'd look to get short versus the high of day for potential unwind back towards lows from pre-market, from after hours on Friday, back into the low 30s, ideally around 30 cents. Historically a very dilutive and fairly toxic name. So if the stock can give me that action, I'd be interested for a short. Alternatively, complete avoid. And the idea is avoid if we do reclaim 40s on low volume and we consolidate for a day or two above the developing multi-day VWAP, then it might become a candidate for a liquidity squeeze higher. Next up to a mid-cap, NBIS. So with NBIS, beaten down, mid-cap AI name, almost 50% off its 52-week highs now. For me, I'm leaning towards the long for potential relief. Similar to Tesla, especially if we can get above last week's range, Thursday, Friday, and above its declining 5-day moving average, just for some overall relief in the sector and overall market. NBIS then might be a candidate to express that. Just again, a vehicle to trade intraday. Specifically, as mentioned, I'd be looking for a breakout and hold above Thursday and Friday's high, above resistance in the low 28s and above its 5-day moving average. Alternatively, if we do experience a gap higher, anywhere in the high 20s to 30s, if we were to pull back and hold above the 5-day moving average and above Thursday, Friday, potential resistance turning into support, I'd target a higher low entry as well, as long as we were holding up fairly well above key levels in the overall market and displaying some relative strength in NBIS. So again, just a vehicle to trade that potential scenario. Now shifting gears yet again, moving over to Bitcoin. For that, we can look at IBIT. We can look at MSTR, and of course we can look at the underlying Bitcoin itself. But looking at IBIT here, previous support near 52's previous major support is now confirming and has confirmed over several days as resistance, a nice lower high on a higher time frame. So as long as 52 is acting as newfound resistance, if pops into this area and into the high end of last week's range continue to be met with some selling pressure and fail intraday, I'm going to be leaning short. For MSTR, it's a very similar situation with 300 to around 310 now acting as resistance, previously major support. So if we do continue to get failed follow through to the upside, I'd be looking to lean short on lower highs or consolidation breakdowns intraday. And if we are displaying relative weakness to Qs to the overall market, that will determine how aggressive I am on that idea. Back to small caps, PSTV, a wild one from last week, but a great trader on Thursday and Friday. Now on my radar for potential failed follow through and looking for some shorts. if that backside is confirmed on Monday. So if it does pop back into that VWAP area into 180, 190 to $2, if we do get a push similar to SUNE, my apologies, if we get a push into 2 and a hard fail, like the plan in SUNE, that's when I'd look to get short versus the high of day, and looking for a retracement back towards the lows from Friday and potentially lower to the low 120s. Now, alternatively, again, similar to SUNE, if it's able to reclaim 180s to 2 and consolidate on dramatically decreasing volume, it increases the likelihood of a potential liquidity trap and a stubborn short squeeze out into the mid to high 2s. So it would be on watch for that potential scenario as well, if it were to reclaim on declining volume. Now, lastly, XPEV, this is one I'm stalking as well for potential reversion opportunity, a mean reversion opportunity in the coming days. Doesn't have to pan out perfectly, but in the event that it has one or two more significant gaps higher, and we really see that range expansion and several check marks in the favor for an A+ reversion opportunity, about 4 or 5 of those boxes are already ticked, then it would be on my watch for an A+ reversion setup. In previous watch lists and previous videos, I've gone over really what variables need to be checked for that A+ to be valid, and this is almost there. Now, alternatively, if we get any negative headlines, we get a, for the basket of Chinese names, we get some profit taking. It might set up a potential, B+ to A first red day setup intraday. But in any case, given where we are, where we've come from, it's definitely on the radar now for a move 25 plus potential mean reversion opportunity. So that's everything that I'm watching for the upcoming week in the markets. Of course, we've had a structural shift, and as a result, for the previous several weeks, so has my focus and strategy shifted immensely away from swing and more intraday unbiased reactive trading, which is where I'm seeing consistency right now. And so I'll continue to focus on that until we see a structural shift in the market yet again. So please, as always, drop what your main focuses are in the comments below, what you're watching, key levels to look out for, and perhaps if you have any differing opinions on the stocks that I'm watching for the upcoming week. Good luck for the upcoming week. Wish you all the best, and I'll see you all next week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.